Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 24th of September. Starting off with the FTSE, which is by some miracle managed to bounce off the floor of that rising trend channel, the uptrend line there from back in February. We've got a rising 50-day line, a little bear trap below it, both on yesterday and on Friday, but actually flying today, it would appear. But RSI back above the neutral 50 level at 52, and I suppose we're just waiting for the FTSE to either break 82.20 or the resistance line there from back in May 83.60, or escape the triangle formation that we have in the RSI window, so basically through RSI 57 or below RSI 46. So you've got lots of entertainment there on the FTSE chart at the moment. End of day close back below 82.20, risks a move down towards the floor of that falling trend channel from May 80.10. But at the moment, obviously with today's move and yesterday's rebound, that seems unlikely. Moving on to the DAX, which has gapped up and done it in style today through 19,000. Above 19,000 on an end of day or a weekly close basis, we're looking for the top of that rising trend channel from this time last year as high as 20,100, and looking for that by the end of next month. Recent swing support there around 18,700, and we're hoping that that will remain in place on an end of day close basis. The other plus is the way that we've had an RSI rebound above neutral 50 over the last 24 hours. Moving on to the Dow, which I suppose ahead of the US election will be looking good, or trying to look good. Here you can see that we're holding well above the 42,000 level, looking for the top of that rising trend channel from this time last year. As high as 43,000 over the next, I suppose 2 to 4 weeks, and ideally no price action back below the recent bear trap rebound. 41,500 would do the trick there. RSI still not overbought, it's at 67, so it leaves a little bit of scope there for a move up towards 43,000. Worst case at this stage is that there's a rug pull down to the 50-day line at 40,600, but doesn't seem too likely at the moment, given that we've had 2 of those, or in fact 4 of those, basically since the beginning of the summer. Moving on to Bitcoin, which had a positive glow to start the week, and we're hoping that that will continue. Here, though, stuck at the 200-day moving average at 64,000. We need an end-of-day close above that to give us the top of that falling trend channel from February at 68,000. Otherwise, it's back to the 50-day line, 59,500. So, relatively simple there, but it is interesting that we've held that rather mysterious gap there. And while that's the case, then I suppose the balance is more towards the upside, as dictated also by the RSI, which is at in the low 60s at the moment. On to gold, which has been the star of the show by some distance, and still powering ahead there, and looking for the top of that rising trend channel from December as high as 26.90. Maybe by the end of this month. Obviously it's a slightly shorter month than usual, but looking for that 2700 zone, especially while we remain above the initial September resistance around 2670. Moving on to the stocks, and a weird one to start off with. It's a blue chip as well. Well, it's trying to be a blue chip, Burberry, and just an amazing price action here. We gapped down there in September, the early part of September twice, and then gapped up last week, gapped down again, and then finally gapped up here. So it looks like, at least in the near term, a bear trap island reversal. That should take us up to the top of that rising trend channel from the beginning of the month, as high as £7, and that could happen over the next couple of weeks. Ideally, there's no end of day close now, but back below today's intraday low, around 615 pence, and the top of the channel. But look at that hammer candle that we had yesterday, very, very impressive indeed. So it looks as though a bit of power in there. It's almost as if somebody wants to, or is thinking of buying Burberry, but obviously we don't have bids these days, do we? Moving on to Blackbird, and here a gap higher as well, rising 50 and 200-day lines. We're looking for 9 pence as a minimum. And I suppose now it's time to upgrade the potential target here. So if we do get on 9 pence, the next level up, probably along the levels that I'm trying to draw at the moment, which would be up to 16 or 17 pence, maybe by the end of next month. That might be a bit ambitious, but sort of in the mid to upper teens area, I think would be appropriate if we can break 9 pence after today's gap to the upside. Moving on to one of the biggest movers of the day, which is CloudCoco, up 94%, and apparently doing it on no news, which is always all the more intriguing. There hasn't been any news there for a couple of months. Current situation is that we're potentially in a broadening triangle base, top of the triangle there at 0.41, so that's our target. But initial block here, the 50-day line at 0.17, and we need to see an end-of-day close above that to snap the bear run that we've had in the shares for basically much of the last year. So above 0.17, we could hit the 0.4 plus area there on CloudCoco. Don't want to see the shares back below 0.12 recent resistance. On to Cora, which has been quiet for quite some time, but a couple of days of a rebound here, rising 50-day line as well, looking for 2.5 pence, while we're above the old support there at 1.75 pence. So maybe some people find that attractive. There's also bullish divergence there with the lower low for the latter part of September, and this part of September, and higher RSI trace. Another stock which doesn't get much airtime is Directa, and here potential broadening triangle base. We've got a rebound there at 14 pence and above that, looking for 22 pence by the end of next month after a very extended bear run there. First Class Metals, decent announcement today with a grant, but slight rebound for the shares, but really need to get the shares back above the 2.5 pence level. That would be the initial target on any rebound. RSI very oversold on 20, but obviously it can still go lower than that. Currently, we're still below the old support there on First Class. A slightly better situation on GCM, where we're trying to turn around within a U-shape or a saucer-shaped reversal. So we've had that in place since the beginning of last month, and above recent neckline resistance at 3.2 pence, looking for the 200-day moving average at 4.5 pence by the end of next month or even sooner. Covered Hemogenyx, I think, yesterday, and still the shares edging up here with a nice key reversal to the upside. We've filled the first gap there at 1.5 pence. Above that, looking for at least 1.75, and ideally towards 2 pence by the end of next month. Looks like something nice is happening there. Also looking nice is Heiq, which has had an amazing turnaround. This is a classic bear trap island reversal, so gapping down and then gapping up sharply. We were hoping that the shares would stay above the bottom of the gap there at 5.5 pence, and they've done that rather well. And the target then up to filling the gap at 8.8 pence, which we're nearly there on. So looking for a return to 11 or even 12 pence by the end of next month. Ideally, there's no price action back below the floor of the latest gap, 6.5 pence on Heiq. Decent news today from MTI Wireless, which I didn't actually write up this time, but can't do them all. Here we've got a rising trend channel. We hit the top of that there at 53 pence. Next level up is looking like it would be the 65 pence area, the upper parallel of that rising trend channel base from the summer of 2023. Looking for 65 pence by the end of next month, while we remain above the old initial 2024 resistance at 49 pence. Mkango is next, and news again from the company. Here we've got a rising trend channel base, finding our feet there around 5.5 pence. Initial target there, 7 pence, best case up to 10 pence by the end of next month. Ideally, we stay on the right side of 5 pence in the meantime. MyHealthChecked doing well as well, and here flying, in fact. We've got a rising 50 and 200-day moving averages. It was a gap close, bear trap gap close buy signal at the beginning of last month, and the shares have risen from there. The current situation is that we were looking for 15, 16 pence as an initial target, and now up to as high as 21 pence by the end of next month, powered by the run up to a golden cross between the 50 and 200-day lines, which should be in the next week or two. On to Ondine, which has managed to get a premium placing of 5 million Canadian dollars, way above the current share price, which should be taken as a positive signal. Rising trend channel base there, top of the channel there, 9.3 pence. And the next level up, if we can get through the 9 pence area, it would be up to 13 pence. And obviously the higher, a little bit higher than the placing price today. Ideally, we stay above the recent resistance at around 6.3 pence, whatever happens there. On to the last two. First one is Plexus, which is turning around, sort of still dreaming of the shares to get up to the top of that falling trend channel there at 26 pence, but the initial block, the 200-day line at 15 pence. End of day or end of week close above the 200-day line. We could be on for the low 20s for Plexus. Otherwise, we want to stay above 12 pence and the 50-day line. Finishing off with Raspberry Pi, where there's a bit of a disconnect between the excellent news that we had today from the company. I think the interim results looking very good indeed, but unfortunately these shares are still drifting, which is maybe a sign that the company needs to do a little bit more work in terms of communicating its fantastic fundamentals to the market. There's a resistance line there, top of the falling trend channel there at 402. If we can rally, that would be the initial destination while we're above the floor of the gap there at £3.56, but disappointing, as I said, that we've got that drift in the share price. That's it for me today. More updates tomorrow.